What's up, ladies and gentlemen? Hey, Alan Diaz here with Power to Gain Wealth, and I'm excited because I got George Lewis here, and it was exciting because I was at this training program where I was training the hospital up in Rancho Cucamonga, the clinic out there, training the doctors on hospitality and all that. As I started to head out, the traffic was crazy. I was like, what? It's going to take me that long to get home? So I stopped at this coffee shop, and that's where we met.
Yes.
I saw you over there. You were studying away, talking to some people, and I was like, man, this guy's killing it. He's doing something. He's selling something. But I saw the book that you had there, and what was that book?
The Philosophy of Money.
Yes.
So you asked, I was, like you said, I was just sitting at the coffee shop, just reading my book, studying, doing some for myself. You just reached over, hey, what book are you reading?
Yeah.
And let you know what it is, and then we introduced ourselves and grew our relationship from there.
Exactly.
Yes.
It's been good, been to a few conferences. I think one of the first things I noticed was, one, you were like all professional looking killer in there, and then I saw that book, and I go, oh, this guy must know money, and that's what I spend my time studying. Mm-hmm. And then when you stood up and we agreed, I'm like, this guy's an athlete. Now, what did you do?
So I played football all of my life.
Nice.
I played from 8 until about 26.
Awesome.
So I played in high school, played in college, played a little pro afterwards.
Yeah.
Loved it. Loved the experience that it gave me. Yeah. Loved the life lessons that it gave me.
I could tell that you must have learned a lot about discipline. It's a quote on one of your profiles that you sent me, that you can basically achieve anything with good discipline, something to that effect.
Yes.
I don't know the exact quote.
The key to success in any endeavor is self-discipline.
Yes, and I could see, usually when you see someone, and they stand up, you go, okay, this guy's got to be disciplined to keep that fit, definitely. Right? So I appreciate that. And since then, we've been hanging out. You've been to a couple of my conferences, The Power to Gain Wealth, and a lot of good information. What'd you think of that?
I loved it. Awesome. You're bringing value to individuals and business owners that is bar none to anybody out there.
I love it.
You're allowing business owners to interact with each other in an organic environment, which allows that growth and being able to bounce ideas off of one another is great, especially with great minds.
Yeah, and I love that we're building a community of like-minded entrepreneurs and businessmen and women that want to genuinely help each other, because if we help each other thrive, we're going to thrive.
I agree.
And so that's after I got to know you and I realized, wow, this whole podcast is really about giving people some good, valuable information that can help level them up. Of course, they have got to take the action. Action, I think, is getting into our community, because we're even talking about something that we're going to look into in the future. Yes. We'll have you back when we talk about that. Yes. I don't want to give that away to them now. Yes. But I noticed that one of the things you do is what a lot of really wealthy do. The billionaires, the millionaires that I run with. I was in Florida with Kevin O'Leary, Marcus Lemonis, and they will know. Obviously, you know Kevin O'Leary from Shark Tank, the bald guy, that kind of thing. And they do a lot of teaching and training on all this family bank stuff. Mm-hmm. And when I started talking to you and asking you about that, I'm like, whoa, wait, you do that? That is awesome. So briefly, tell me, what is a family bank?
So building a family bank is utilizing utilizing dividend-paying whole life insurance to be able to fund your life.
Okay, so basically they establish this setup, this entity, right? And they get their insurance. What kind of insurance is it that they get?
So you're going to get whole life insurance.
Okay, whole life insurance. Is it a death penalty? A death?
So the great thing about dividend-paying whole life insurance is that it provides a death benefit as well as it has cash value that accumulates over time. So the longer that you live, the longer that you're prosperous, the more money that accumulates in the account, because instead of paying stockholders, paying the dividends into your policy, which helps you grow on top of it.
And you're not using, per se, like a financial advisor who's taking 1% and all these percents. You help them set it up. You get them going with this this whole life insurance. They're paying their money into that whole life insurance, and as that builds up, this cash in there, they can then begin to take loans against that in a way that creates their own bank, and so they're paying themselves on their own loan, and they can even charge themselves interest, right, if they wanted to, and they just build their wealth.
So yes, so yes, as that cash accumulates over time, say that you have $100,000 in there to give you a round number.
Okay.
And you wanted to pull out $50,000 to throw into your next real estate venture.
Yes.
You take out a loan against your policy, which is collateral.
Yeah.
So it will not affect the death benefit for your family. So so your family is always protected financially because that death benefit is there. Yeah. While you're alive, you have the cash accumulation to be able to grow.
Love that. Yes.
And you pull that, take out that loan, put it into your next real estate venture. After you get that money back from that real estate venture, put it back into the policy, pay off that loan. Yes, you're going to pay a small interest. Okay. Currently with my company, the number one mutual company in the U.S., our interest rate is at 5.2%. Okay. So that means you are going to pay back that $50,000 into your own policy, and that interest goes back into your policy.
Wow.
And there's no strict requirements on getting the loan. Okay. So there's no credit check. Yeah. There's no pre-approval, anything.
That's great.
Because who's the bank?
You are the person who has the family bank.
Exactly.
Now, I was reading some stuff, and I have attended some of these seminars, and I had heard the story about the Rockefellers who set up their family bank, and then the Vanderbilts kind of set up something, but they didn't do something properly, and their wealth only lasted about 4 generations or so, 4 or 5. But the Rockefellers, their wealth has this waterfall or this trickle down money that has continually begun to flow down to their grandchildren's children's children because he set things up right, and that's a family bank, basically, right?
So essentially, first step in that process is getting your whole life dividend-paying whole life insurance. Okay. And then, secondly, establishing an irrevocable trust. Okay, perfect. Where you're putting the beneficiary of the life insurance policy as a trust. Okay. As any member of it's a family trust, not or it would be the Diaz trust for yourself. Okay. Okay. And as someone were to go, that money, the death benefit goes into the family trust. Gotcha. And then the beneficiaries of the trust are being able to utilize that money and fund their life. That's awesome. That's how the Rockefellers did it. They did it through New York Life and are still thriving and are who they are to this day.
Yeah, that's crazy. I was at this conference on the East Coast, and I was with a gentleman by the name of Eddie. He just sold one of his companies for $1.3 billion. Wow. And he has his grandpa set up a family bank. And so he was telling this story. I was cracking up. He goes, he was at school, and he was like, yeah, I'm going to get my first car. And the guy's like, oh, okay, yeah. So, what kind of car are you going to get? Where are you going to get your loan? He's like, I'm going to go to my family and ask them for a loan. Like, what do you mean you're going to ask your family for a loan? I mean, well, I have to go before them and ask them for the money. He's like, well, why don't you just get a loan at the dealership? He's like, you can get a loan at the dealership? The guy's like, you can get a loan from your parents? He was like totally shocked because he didn't know anything else other than all the relatives, all the family, they actually take loans from the family bank and use that, and they pay it back, and it goes back into the family bank, and it continues to grow their wealth. I don't know if things are still able to be set up that way. I would imagine so. Mm-hmm. I mean, he has his. They have like $500,000 in their family bank, and they have people who basically say where it goes and how it goes, and if a relative that they have this insurance on, like I think one of his grandpas, they had an $8 million policy, and when he died, that $8 million goes into the trust, and now they have lots of money.
And then they have $8 million to be able to utilize however that your family wants to. And Uncle Sam can't touch it.
Yeah.
Because what's the benefit of having life insurance? It's a tax-free avenue that is given to your family. Man. So Uncle Sam isn't going to touch that money, as well as that family. Your family's going to be able to utilize that for generations.
So basically, they get money into that trust that they can control tax-free.
Yes,
I love it.
We talk about generational wealth. Dividend-paying whole life insurance is the only way to be able to pass down that wealth.
What a way to leave a legacy, huh?
Yes, it's one of the greatest ways to leave a legacy because that shows the love that you have for your family.
Yes, no, absolutely. I like that. I think that pretty much every guy that's married, and probably even those that aren't married, when they think about one day having children, they want to leave something for their kids. I mean, it's definitely my desire. And we're getting all that set up. I've been readjusting some things because I have companies I own in different states and stuff. So I'm trying to move those around because I'm going to put them under a holding company, and then the irrevocable trust will be placed there, and then we're going to rock and roll. We've already been meeting over that, so I'm excited about that. But I think that I want to say that this is like an unkept secret, but it's really not. It's just people probably just aren't listening to the right avenues or the right people because it's been around for a long time.
So it's been around. So the life insurance industry is actually older than the banking industry.
Oh, wow.
The word dividend came from the life insurance industry. Okay. So you are very much into the stock market and know where dividends are in that end. But the word dividend came from the insurance company because all those profits are getting put back into the policies.
Yeah. Now, how do you feel about the insurance company with the current economy right now as compared to the banks? We've seen a couple of banks close down. One of a U.S. bank just recently closed. So we're seeing some chaos there. Where do you feel like the insurance industry is at on all that front?
It's a level.
That's great.
Because I know my company is AAA rated by all four financial institutions. Wow. Our financial backing and strength is actually higher than U.S. government.
Oh, wow.
I mean, if we had to pay out all of our policies and pay out all expenses, we would still have a $32 billion surplus.
Wow.
So
it's good business right there.
Agreed.
Yeah.
So I believe so. To answer your question further, the life insurance industry is going to be level and growing. Wow. Because, like I said before, it's been around longer than the banking industry. Wow. So its rules and guidelines and just a track record has been there for the longest. Yeah. And you know that your money's protected when you're putting your money there.
No, I love that. So if someone were to set up a trust and that irrevocable trust, get their family bank going, so it's pretty safe from what I'm hearing from you, because the banks, they're not even as safe as the insurance industry right now, and the company you work for completely has plenty of money. So how hard is something like this to set up for someone?
Easy. Yeah. Easy. Just a simple appointment. It takes an hour to an hour and a half of time, depending on your day. And someone could come out to you. We could meet via Zoom.
That's great.
And there's multiple options. It's very simple to set up.
Now, I threw out an $8 million policy, but it doesn't have to be that.
So no. So each policy in each bank essentially is tailored to the client. Yes. So Alan and Johnny and Joe are three different individuals. Yeah. Those three different individuals are going to want three different things. So I'm going to tailor three different solutions for you three individuals, because your assets are different than Joe's assets, and Joe's assets are different than John's assets. Okay. So it's based on the client and what your needs and what your wants are. So it's very budget friendly because it's based off of your budget. It's based off of what you want to afford, and where you want your goals to be, and where you want your family to be in the next 30 to 100 years.
I love that. Now, so I have this question, and it really is, as I was navigating business, growing and scaling and building all the companies I own and the real estate and all that kind of stuff, it wasn't until I began to get in the room with like billionaires and many multimillionaires that I even began to really hear about a family bank. I mean, I wasn't really listening to stuff out there because the Rockefellers have been doing it. And so when I began to hear that, I'm like, oh, okay, wow, is this something only for billionaires, or is there pathways for people that are just getting started?
Every normal American can do this.
I love that.
Every red-blooded American can do this. All you need is the knowledge to do it. The life insurance.
That's where you come in.
Exactly. And I appreciate you for allowing me to come on here.
I love it.
But that's what allows people to be able to grow.
Yeah, no, that's good. So you could basically take them where they're at, work a policy based on their cash flow, their assets, and then they can begin to grow. And if I'm hearing you right, you can also, as they begin to produce more wealth because they're growing and scaling up in life and business and all that, they can add more and change that policy. Is that hard to change the policy with you?
No.
They just change it and say, hey, I want to bump it up from maybe $1 million policy to an $8 million policy or however.
If that's the case, then we would just add an additional on top of it.
Okay.
So we just layer them on top of each other. So say that you got $1 million policy today, and then 2 years from now wanted another one. Okay. Then you layer them on top. Nice. And now you have $2 million worth of coverage, and then just keep going from there. There's no limitations on how much coverage you can have. What I suggest for every individual is to get dividend paying whole life as well as term on top of it, because at some point you're gonna grow and you're gonna want more, and you're gonna want to build your asset and grow it. Yes, so with my company and having term insurance, you can convert it to whole life down the line. To grow your portfolio. That's great. Down or over the years.
Now, correct me if I'm wrong. What I understand here is term life is basically you're paying for life insurance, but it has a done date on it.
So term is in very simple terms. Mm-hmm. Term is like renting an apartment. Okay. Whole is like owning a home. Okay. So term, you are paying a premium for a certain amount of years. So 10, 20, 15. Okay. And then you're paying it for that extended period of time. There's no cash value. After that extended period of time, after that 20-year period, the premium will increase, which you're going to let that policy go. And that's why I suggest whole life insurance, because you want to build a legacy. Yeah. Absolutely. And the whole reason for it is for your family and to grow that generational wealth for down the line. So whole life insurance is the better way. Is the only way to do that in the long run. Yes.
But you were suggesting both policies.
Yes, a layering
approach.
What's
the strategy?
Yes, the strategy of term is to, like you said, as your business grows, as you grow as an individual, the policy can grow with you. So like you said, if you want more down the line and if you want to grow your portfolio, that term is convertible down the line. So you can convert from renting to owning, and then grow your family bank even more.
Okay. But why? I'm trying to understand, why would I start off with term? Is that because
you don't have to term?
I get the full benefit now if I were to die now?
No, you don't have to start off with it. You would have both.
Oh, okay.
You would layer the two.
Okay, sounds good. Now, well, why is this any better than an IUL?
Because index universal life insurance policies are a new concept that are giving people the wrong ideas about family banking as well as the life insurance industry as a whole. When you're having an IUL, it's essentially like you're jumping on a trampoline inside a room like this.
Okay.
You have a ceiling and a floor.
Yeah.
So over as we talked about term, right? So over the years, you are fighting the cost of insurance.
Gotcha.
So in a whole life insurance policy, that is already factored in.
Okay.
With an IUL, you're paying for that cost for your entire life.
Oh, wow.
Which is diminishing the value and the ceiling to how much you can make in your policies.
Okay. So you had sent me over a video, and it was quite interesting. It talked about several things of how, or basically sales agents selling you on an IUL because maybe of the popularity, but in actuality, they're pitching some faulty information.
Agreed.
What are some of those faulty information that they're pitching?
They're saying that the fees are not high, which they are.
Okay.
Say that you wanted to surrender the policy at any point, or any of the cancellation fees and other fees that are associated with just running the policy, eat up into the cash value. And a lot of agents don't allow their customers to see the end all be all of the policy and don't give them the full details of what they're really getting.
Because I'm seeing IULs everywhere. I mean, there was a moment when there's an insurance guy down the hallway who was like, Alan, you got to do an IUL. You got to do IUL. I'm seeing it on TikTok. I'm seeing it on social media. Everybody's pushing it. I'm like, well, I don't know. I went through his little spiel, and I was like, I'm going to wait just a little bit. I want to get some more information. And then I run into you, and you're like, no, IUL's not as good as whole life, set in a family bank.
So I just say this. If New York Life is the number one mutual company in the U.S., why don't they have an IUL?
Interesting. Oh, man, that's a good point.
Wow. They've been around for since 1845.
Oh, wow.
So been around forever.
Yeah. And they don't have an IUL.
And they don't have an IUL. Or the top insurance companies in the U.S. don't have IUL.
I like what you're saying, because my desire for Power to Gain Wealth is to give people real information.
Agreed.
There's so much false information on YouTube, and I can't believe how many people listen to advice on money making from poor people. It's like, wait a minute, maybe you need to be careful of their advice. Doesn't mean it's necessarily wrong, but if they haven't proven themselves and produced it, that can be a challenge. And so there's so much data flying around on social media that I wanted to be a avenue where people could find good data. And when I ran into you and we had talked briefly about that, I'm like, I got to have this guy on my podcast, man, because this is a wealth creating machine.
I agree.
The whole life and doing the family bank. And so now, what if someone were to say, well, if they have an IUL already, is there any way to change that, transfer out? Do they keep that?
Yes.
What would be your advice?
So my advice would be to talk to a outside agent, like myself. I can go over that enforced illustration for you to answer all of the questions for yourselves. A lot of I've seen a client recently to where they had caps on their IUL, to where an IUL is an index universal life, to where it mirrors the S&P 500.
Okay.
So it's not actually in the S&P; it's mirroring it.
Oh, interesting. Okay.
So that's one of the downfalls that people think as well.
Wow.
That they think that their money is in the market.
But it's not.
It's not in the market.
Really? Wow.
Because the downfall of IUL agents, they're not registered agents.
Really?
So registered agents have to pass the SIE Series 6 or Series 7.
Okay.
They don't have those requirements to be able to sell anything that's in the market.
Wow. Wow. And the sad thing is I've seen so many people, they're just jumping on this bandwagon. It's like everybody's talking about IUL this, IUL, and they're getting pitched all the wrong data. And unfortunately, they're not getting set up correctly or right. And so I'm glad that, so basically, because your information is going to be in our description below, they'll be able to reach out to you, find you, and say, hey, how can I convert this? And so you would, what would be the process? You just set up a meeting?
It's very simple, yes. Just set up a meeting. We would sit down, go over your IOL, see where it's at, how it's performing, and then see what options that you can pull. Yeah. So in real estate, it's a 1031 exchange. In the life insurance industry, it's a 1035.
Oh, okay.
So 1035 exchange.
Just transfers it right over.
Exactly. It transfers it right over. There's no there's no taxes. There's no interruption of the money. It's just a 1035 exchange over to the new insurance company.
Yeah.
Very, very easy process. And
I love it.
And then we go from there.
Yeah. What is that, like a 1-page, 2-page, 3-pager?
It's 2 pages.
2 pages. That's great. And for those of you who are our new listeners, a 1031 exchange, if you invested in real estate with an investor or which we have plenty, and you get your money back, if you did it with cash, then what happens is you're going to pay taxes on that. So you want to transfer that money into either another investment or another house of some kind. So real estate, you use the 1031, which is a document, fill it all out, and it goes over there, and you bypass the taxes on that particular cash flow, which is great. So you're saying they filled a 1035, transfers the IUL tax-free?
So the client doesn't have to fill out anything. I fill out all of that. So
I
they
love
don't,
that.
Yes,
oh,
they don't have
man.
to do that. Yes.
I know I found the right guy right here.
Yes.
Yeah.
You don't have to fill out
So
anything.
sweet.
I fill out everything.
Okay.
My team fills out all that stuff. You just sit there, look pretty, and let
Nice.
me work.
I
work for
love
you.
that. So
Yes.
basically, it's super simple for anybody who wants to change. All I got to do, reach out to you,
Yes.
set the appointment, go meet with you, fill out you're going to fill out the 1035. It transfers everything over. Boom. They're in a new pathway of a pathway that's actually going to benefit them, build a legacy, and make them more money than an IUL because there's no cap.
There's no cap, as well as there's no cap, and it's a safer avenue to put your money in because IULs have another downfall to where if you're not funding them correctly, so if you're not overfunding them and making sure that you're accumulating that cash value, that the policy will eat up itself.
Interesting.
It'll implode. So I've met with multiple clients to where I've seen IULs to where in the later years they'll lapse to where they'll not be enforced anymore because the client isn't it wasn't funded correctly for them to be able to last their entire lifetime.
Okay.
So which this is another downfall to what you were saying, where some agents put clients in bad situations when they don't give them the full information and don't are just trying to make a commission, which, like you said, we're here to be truthful and to help people gain wealth.
Exactly.
If I do good by you and or if I do good by you, I'm gonna do good by myself. Yep. And that's what matters to me, and I know that matters to you for sure.
Yeah. That's great. No, I really love that, and I love your heart, and that's why I'm glad that you're on this show, because we really do want to just take care of people, and I think we both agree with the Zig Ziglar motto, which is when you help other people reach their dream, take care of their family, their legacy, we're going to be taken care of. Our lives are good. We're blessed, and so I love that. That's great. And so what would you say, what would be your advice for everybody that's in an IUL right now? You'd basically say, you should change it. You should come in and get a whole life insurance. Does it cost them like money for you to fill out the 1035?
It doesn't cost them anything.
So it doesn't even cost them. You're going to do the work and cost them nothing.
Exactly. So, I mean, my initial consultation with you is free. I do go through a financial plan budget with you and then see what you have in place and tailor those solutions for you.
Wow, this is a no-brainer. Now, when they get their trust, they need a trust attorney, and luckily I have one.
Yes.
So they could work with us, and both of them will end up taking care of them. We'll get their trust set up. If they want to do it with a holding company, they can, but at the minimum, they need a trust, the irrevocable trust, and then you set them up with the whole life insurance policy that can be leveled up, as you were talking about, layered. I like that word. And then from there, they can begin to take loans on that money, go invest it into assets, buy whatever kind of asset they want. They pay it back. Their wealth grows.
The greatest thing is you're funding your life because it allows yourself to be able to have that peace of mind, and that hey, if you want to take your family out for a vacation, if you want to pay for your child's education, if you want to buy a new car, if you want to buy a new investment property, whatever you would like, that money is utilized for yourself.
Wow, that's so good.
And at the end of the day, it's just a loan that you're taking that money out against, and you're putting it back
into your bank.
Into your bank.
I love it.
And you're putting it back into your pocket.
It's like a no-brainer.
Exactly.
No, that's perfect. So people can get started off with them. Like say, like it's a single dude or a gal, and they're like, they hear this and they're like, wow, I want to get set up. Maybe when I'm married, they don't have to wait, right? I mean, they could probably just start a small insurance policy or a whole life insurance policy with you. We can get the trust going. They're putting like $100, $200, whatever.
So the best time to start is now.
Love that.
Best time to start is now. Yeah. And the earlier you start, the better.
Yeah.
Because with life insurance, the earlier you start, the cheaper it is.
Interesting. That is really good. That's true. Yeah, get older, more expensive.
Exactly. So the earlier you start, the cheaper it is. And what's the eighth wonder of the world?
What is it?
Compound interest.
Yes, compounding interest in the absence of taxation.
So if you allow our mutual company to throw dividends on top of your premiums that you're putting in there, and that interest compounds on top of each other year after year after year after year after year.
Oh, man. They're just growing well.
It's
quickly.
growing.
Now, let me ask you this. Are there any boundaries of what they pull their money, what they could put it on? For example, could someone take a loan against their family bank and then invest that into like an apartment complex with me or somebody else or an investor? Can they do that?
Yes.
And now their interest rate on their loan would be like 5%, but if they put their money in with a good investor, they're probably getting close to 20, 23%, and now they're making a spread of whatever.
19%.
Holy smokes, this is great. And when the money goes back in from that investment back into the family bank,
policy,
it's tax-free,
and
right?
it's tax-free. It's tax-deferred.
Wow. Okay, tax-deferred.
The money's going tax-deferred.
Okay.
And it's the tax-free death benefit at the end of the day.
That's great.
You're not paying any taxes on the loan.
Yeah.
And you're not paying any taxes on putting the money back into yourself.
Wow, that's great.
So it's and this is the concept that you love to talk about is tax-free.
I love it. That's definitely being added in there, man. We're going to be talking about that a lot in our conferences. I like it. Now, I've heard this question, and so I want you to break this down for those listening. So let's say someone takes a loan, right? Mm-hmm. And let's say they have like, a couple $100 million maybe in their bank, but they take a loan for $1 million out. Are they then, because they potentially pass away, what's going to happen? Can they still access their money because they already took a loan out? How does that work?
Very simple. So if you have an outstanding loan during that time, that loan amount is just subtracted from the overall death benefit, and then the family is left with
their money.
With their money.
Yeah,
it's very simple.
Yeah, so it basically pays off that debt, and they get the rest, whatever's left over. Exactly. Which, if they have $20 million in there, they got $1 million in debt. It pays it off. They still got $19 million.
Yes,
that is great.
Yeah. So I mean, that is so with loans, you gotta make sure you're paying them back.
Okay.
But the great benefit of it, there's no fixed schedule on the payment schedule.
Okay, so wait a minute. Okay, break that down. Break that down. I like this.
Yes. Okay. There's no fixed schedule. So you don't have. So it's not a 10-year, 20-year, 30-year loan.
Wow.
you have your entire lifetime to pay off that loan. You can pay it off tomorrow, or you can pay it off in 20 years if you want. You just got to make sure that for that year that you're paying off the interest.
Great.
Make sure you pay off the interest so it doesn't hurt you in the long run.
Gotcha.
So you're not paying more money.
Okay.
But if you are a individual, I mean, with wealthy individuals and just everyday American, if you're, like we talked about before, if you're disciplined, and do what you need to do and pay your loans back, you will be perfectly fine.
Man, that is so good. Now, what if they got this loan, right, and cash flow got a little tight, they miss a payment on a monthly payment? Is there any penalty?
There's no penalty because
I love that.
There's no penalty because who are you paying back?
You.
Wow. So you're paying that payment schedule back on you.
Okay.
But that's where the discipline comes in, and that's where, because there's a lot of flexibility. You just have to make sure that you're doing what you're supposed to and make sure you're paying your payments. But at the end of the day, if say you didn't pay the payment, all it does is get subtracted from the overall death benefit, and your family just doesn't get that amount at the end of the day.
So basically, in a nutshell, for everybody listening, you want to go whole life, set up your family bank, skip the IULs. You don't need that. That's not as good as this. You could transfer it over, very simple, no cost to transfer, no cost for the form to fill out, the 1035. You're going to take care of that. All you need is one meeting with you, and their life and trajectory and setting up a family legacy can then begin put in motion. And they could build that through discipline, just constantly building it. And life is amazing. They can one day retire and then just enjoy their life and know that they have monies that are going to go and be passed down from generation to generation. Yes. Wow. That's like a no-brainer. Everybody should probably do that. I think that is
agree.
Great.
I think life insurance is one thing that everybody needs.
And what wife doesn't want their husband to have some form of life insurance?
For protection, yes.
Yeah.
I mean, because like we said at the beginning, it shows how much you love your family.
Yeah. Oh, we didn't talk about this. So say a husband and wife, right?
Yes.
They get a policy for each other, or they get their own policy, however that works.
They would both get their own separate policies.
Okay. And then they can both make the trust the same beneficiary?
So yes, if John and Jan had two whole life policies, the beneficiaries of their policies would be the family trust.
Okay.
And then at the time of their death, that money would go into the family trust, and the family can utilize it however they want.
Wow. So if someone started this whole life insurance, sorry for the questions, I just want to make sure I fully understand and they understand. So they're paying on this for like 2-3 years. They got an $8 million policy and they pass away. $8 million goes into that account?
Yes. Tax free.
Oh, wow. And then, so now parents are gone, because that happens. We get older, we pass, that's why I want to leave something for my kids. Then how do the kids access that trust?
And that's exactly why I got into this industry, because I was one of those kids.
Oh, really?
My father passed when I was in high school.
Oh, man.
So, yes, I was one of those kids. If he would have had something set up in place for myself, my life would have been completely different.
Yeah, wow.
So yes, if you set that up for yourself and your kids, it's a great legacy and a great item to have in place for them, because that financial protection is there, stability is there, and you know that you're going to leave a legacy for the Diaz family. We always talk about generational wealth.
Yeah.
There we go.
There it is. So my wife and I, we say we both have an $8 million policy. We pass on. That money drops into the trust, $16 million. Now my kids just start accessing it. How does that, is that process difficult?
No. So they would be the trustee of the trust.
Okay.
And they would be able to access that money within the trust.
Okay.
And be able to utilize that money however they would like.
Now, as they build their families, can they take over that trust, or do they need to start their own trust but still reap the money until that money's gone of that trust?
This area is out of my expertise.
Okay.
That would be the...
We'll deal with the trust lawyer.
Yes, that would be the trust attorney.
Okay.
Yes. I don't want to put myself in a bad situation.
No worries.
Yes.
No worries. Can't say what we can't say,
exactly,
right?
Yes.
Yep. Even as an investor, there's things I cannot say.
Yes. I could say something, but I don't want to...
No worries.
To misspeak and give somebody misinformation.
Hey, they just need to call us so we can connect them to our trust attorney.
I agree.
Perfect. It works out. Yeah,
agree.
but meanwhile, they can call, get in touch with you, and get that appointment set up and get going from there. Let me see. So we covered those two things. So that's basically what you're saying is the gold standard for creating wealth and legacy is that whole life insurance. Is there anything else within the insurance realm that we should be aware of as it pertains to entrepreneurs, business owners, people want to leave legacies? There's something out there that I don't know. I know those two now.
So, and that's a great question. Individual disability insurance for entrepreneurs.
Okay.
Because
explain that.
If you were disabled at any point for 90 days or more, and as an entrepreneur, how are you going to pay your bills?
Exactly.
How's your family gonna function?
Yeah.
If you get disabled.
Yeah.
Not if you pass. What if you get disabled?
Okay. Is that not okay? Please forgive me for my ignorance. Is that not the same thing as Aflac?
No.
Okay. Aflac covers what?
Accidents.
Okay, accidents.
So if you're disabled, if you are unable to work your own job for an extended period of time, then that's when IDI insurance comes in, or individual disability insurance, which 25% of individuals will face in America. One in four people will be disabled for 90 days or more within their working lifetime.
Okay, so I'm hearing two different things. We got Aflac, and then we have the disability insurance that you talked about. So one is for entrepreneurs and one's for employees, or
it's both. Again, Aflac is not my expertise.
Okay.
But individual disability insurance is to where if you're disabled from your job, yes, you're good, and that supplemental insurance to cover your income that you would be losing out on is covered.
Wow, that's great.
And then secondly, so for a lot of the baby boomers who are going to be going into retirement and going into their 70s in the next couple of years, or in their 60s and 70s, long-term care.
Oh, okay. So that insurance takes care of long-term care as well.
The long-term care is another option that we do offer. That is something that individuals are going to be able to utilize down the line, because the baby boomer generation is going to be our biggest generation coming in. And you already know with housing, we have a shortage. Yeah. And senior housing, there's even a more shortage of that.
Yeah.
So when those individuals retire and go, because they're not having a lot of kids, or their kids aren't taking care of them. Yeah. They're going into homes at the end of the day.
Or if their Social Security runs out.
Yes. And that bill for long-term care is a lot.
Yeah, that was one great thing my mom did, like you, and I feel that I lost my father early on, didn't have anything like that set up, so that was always one of those monumental moments that you're like, man, I wish I had a dad around. And then when my mom went, she was in that like hospice care while she battled cancer, and
I'm sorry to hear that.
Yeah, thank you. And it's never good to lose a loved one, but. Yeah. My mom had set that up. She had that insurance. It took care of everything. I paid zero, zilch, nada. It was. I just wanted to focus on my mom, not bills and junk.
And that's what life insurance does. That's what each of these items do. They give you peace of mind. Okay. Because it allows you to grieve in the proper way. Yeah. You're not grieving about finances.
Yes.
You're not worried. Like, you are grieving about losing your mother instead of how am I going to pay for this funeral? How am I going to pay for flowers? How am I going to pay for their procession? How am I going to pay for the plot?
Oh, man.
All that.
And, you know, that makes sense, too, because when my dad died, he owed some property. He owned property way up in Paradise where all the fires were by Chico. Yeah. Owned a bunch of land, a bunch of stuff. I was a young guy. I was in my early 20s. I didn't know what to do with that. I went into probate. Exactly. Everybody got their piece of pie out of it. It just felt like everybody was like just flooded on it and took everything they could, when it could have been in an irrevocable trust with that family bank, all the assets being transferred to me without any cost to me. And no probate having to be worried about, no fees, no nothing. Oh, man.
And everything is organized and set for you because because you're thinking ahead.
Yeah.
And you're planning for the future.
Makes sense.
This is where we are with adults in America nowadays is we don't plan for the future.
Yeah. I think because they're so overwhelmed sometimes with the finances, the taxes, everything coming at them at once. But my encouragement would be, hey, create some bandwidth so you can get into a whole life insurance policy with a trust, move all your assets over there. It's going to save you on taxes. It's going to save you on finances. You're going to leave a legacy. It's like a win-win-win-win-win.
It's going to save you on peace of mind all the way around.
I love it.
It's going to help you sleep better at night.
Yeah. So for the people listening to us, I'm Alan Diaz. You're George Lewis. Yes, thank you. And then go ahead and tell them how they can reach out to you. And we're going to put it in the description.
Yes.
Is there a website or an email?
So yes, you can just call me, George Lewis, 909-697-9065. Again, it's 909-697-9065. Or you can email me at gslewis, Lewis, at ft.newyorklife.com.
Awesome. Well, ladies and gentlemen, I thank you for being a part of this podcast with us. You know, my desire is to bring very amazing, well-educated, experienced, not necessarily educated, but experienced as well, people who are movers and shakers, who are producing business and products and quality services that benefit our society, our community, that are doing a great job at taking care of their clients, that have good, solid, sound information so that we can all gain wealth together. If we could work together as a community, that's my favorite thing because, you know, the fact that I'm going to use you, you're using me, we're building each other's wealth, we're taking care of each other, we got each other's back, and I want this whole thing to be about inviting people into our circle, and let's do something together great.
I agree.
So, George, I thank you. I appreciate you, man. I'm glad we ran into each other. I'm excited for the years to come. All right.
Can't wait.